Hello, everyone. I'm joined today by CoStar Group's Carl Gomez for another Stewart title Fireside chat on current trends and developments in the world of commercial real estate. CoStar is the leading provider of commercial real estate information, analytics, and online marketplaces. Carl is chief economist and head of market analytics for their Canadian operations. And with more than 20 years of experience as an economist and institutional investment professional, we're very lucky to be joined today by one of the experts in the field. Thank you for taking the time today, Carl, and it's great to see you.
Thanks very much. Great to be here.
So we wanted to talk a little bit today about the office and retail sectors. What does the fact that we're still doing these virtual chats and unable to connect in the boardrooms almost for, it's a full year now, right?
That's
what
right.
does this mean for the office vacancy rates and a return to the downtown office?
Well, I guess you hit the nail on the head with this situation. Everybody is in a virtual world right now, and it's very difficult for companies to actually gather people in their offices. Obviously, this is not a situation that's unique to Canada. It's happening around the world. But now that we're a year into it, businesses have been forced to adjust, like everybody has, and basically they've brought people to work from home. Technology has facilitated this sort of situation, and the end result has actually been that productivity for businesses and their end use activities is actually held up, if not done even just a little bit better than they were prior to the pandemic. So, the big question is, as this continues to go on, because we still don't have, full immunity in Canada with vaccines and whatnot, businesses are starting to think, how long are we going to continue to do this? And the end result, is basically that we're starting to see a lot more sublease space coming onto the market. And what that really means is that businesses who have space that they've been leasing but not using right now through this pandemic have decided to put it onto the market to release. What that effectively means is that we are starting to see vacancy rates in especially downtown urban offices rise. And as that starts to go up, we are starting to see the impact on rents. And rents were at a plateau. We were going into this crisis. We had all-time low vacancy rates, and Toronto was one of the lowest vacancy rates in North America. And lease rates were, very, very high from a cyclical standpoint. We are starting to see those adjustments come off as landlords and brokers try to use inducements and other options to get people to lease the space. I think the bottom line is what we are seeing right now is a cyclical turning point for our office markets, where we've gone from what has effectively been a landlord's market now to more of a balanced market where rent growth is coming off, vacancy rates are moving up, there's more choices for tenants. The big question, though, is what happens in the future. We've got a lot of new supply that's coming onto the market, and most of the take-up of that new supply has done very well. 75% of the new supply in Toronto has been leased, upwards of 50% in Vancouver. But the question is, those tenants coming from older buildings, are they going to take up that space? And I think from a long-term perspective, what we do think is going to start to happen is the vacancy rates will move up and may move further into the preference of tenants, where they have a little bit more choice about what they want. Even longer term is really, what is the future of office? I'm a big believer that downtowns don't go away. They're very important places for people to gather, to live, work, and play. Pandemic aside, people will return once conditions start to normalize. That being said, and this is an important point, pandemics have always changed behavior. They've changed behavior from consumers. They've changed behavior for businesses. If you look through history, this has always been the case. As we come out of this pandemic, and there is an end in sight, whether that's the end of this year or into 2022, psychology, the way we do business, things like that are all going to change. And I think that's the major risk hanging over the office market right now.
Yeah, it's definitely it's interesting, and it sounds like there's a subset of the workforce that isn't all that interested in going back downtown. What can you tell us about the hub and spoke model to give employees the option to work closer to home? Do you see that becoming a trend?
Well, again, this is the exact point that I think most people are wrestling with, whether you're a landlord or whether you're a space occupier or a tenant, or even an analyst such as myself, to kind of figure out where the office market is going. Is that as I mentioned, with behaviors changing, many tenants and office using businesses are reassessing their workplace models. They've realized now that you can be productive by having people work from home. Some people are very happy about that because it gives them the flexibility. Some people are not, depending on your demographic. You know, if you're a 60-year-old, 50-year-old person who's used to going into the office all day and coming back, you know, sometimes that's not a great thing because it changes your lifestyle. But I think the reality is that it's going to be somewhere in between, that people will want some sort of hybrid model where they can work from home for some period of time, come into the office when they need to collaborate. But the key question with this hub spoke model is what happens to downtown urban offices? I think, you know, in our view, and where we're kind of looking at it, is these downtown urban offices still are the central place to gather, to brand your company, to be there, and there will still be demand. But the rest of the office demand is going to be far more distributed. So here's the spokes where, you know, if you need a place to gather and collaborate, but you don't want to be downtown, you can take on suburban office space. You can also work from home. You can take some collaborative space in a co-working area. And that distributive model and the end result, I think, will mean that overall demand for downtown office space may contract a little bit. And when you think about it, downtown office space is the most expensive space you can lease. You know, there comes a cost with being downtown. And if businesses continue to be sensitive about the bottom line, that's probably where they're going to try to trim the fat, so to speak, if you can maybe have a more distributed office model. So I think this is the long-term risk for office. I'm by no means a believer that downtown office goes away. The downtowns are essential to our growth, essential to, you know, mixed use sort of activity. It's the heart of the city. But as far as where we were pre-pandemic, I don't think that reality is going to come back in the new normal.
We're all definitely looking forward to a thriving downtown core again at some point, hopefully sooner rather than later. But changing gears a little bit, can you dust off the crystal ball and give us an outlook on the future of retail? Do you see a bounce back? So sorry, Carl, do you see a bounce back based on the pent up demand? And what is the long-term outlook on the brick and mortar retail, as e-commerce is obviously not going anywhere, right?
Yeah, and you know, here's the thing. Retail was already going under fundamental changes because of e-commerce and changes in consumer shopping habits prior to the pandemic. All this pandemic has really done is intensified trends that were already there. We see that in Canada, where there was the shift to e-commerce. Prior to the pandemic, only 2 to 3% of retail sales were done by e-commerce in Canada. That's a very low number. But if you look through the pandemic, and especially through the actual lockdowns that we had, that went up to about 10%. People are starting to adjust. They're getting used to shopping online. It's something that, you know, maybe they didn't want to do in Canada nearly as much as they did in the US and UK and other parts of the world. But that model is working. And what that ultimately does is it starts robbing the dollars that would have gone into bricks and mortar. I think that's going to continue. I think that trend was already in place, and we will see some role for e-commerce, particularly for commodity goods. You know, you need a battery, or you need, you know, some, you know, just general sort of supplies for home. There's no shopping experience that comes along with that. It's just basically a transaction. And e-commerce will facilitate that transaction better than having to get into your car, drive somewhere, and do that. But as far as the pandemic goes, what it really has done is shut down a lot of the experiential retail that people enjoyed. Going to restaurants, you know, sitting, having food, you know, going to a cool shopping mall and looking at some goods, trying out clothes and things like that. Unfortunately, a lot of businesses have gone under because of the situation, because they have low working capital. But I believe that when the pandemic is finally over and people can gather again, there is going to be a heck of a lot of pent up demand to go out there and, you know, have a drink on a patio, go into a restaurant, spend a little bit of money. You and I are sitting on a virtual discussion here, and, you know, we're only seeing our top half of our bodies. I haven't had to put on a suit for, you know, to go into the office for a while. I'm sitting in shorts right now. You can't see the bottom half of me. I think when people are ready to come out of hibernation and we all get together again, there's also going to be a huge pent up demand to go clothing shopping again. You know, it'd be great to buy a new suit, great to buy a new dress, some accessories, some shoes. That whole experience.
Well, it might be a necessity too, right, Carl? Yeah. I don't know if mine are going to fit.
Well, that's, you know, depending on how long we've been locked down and what we're doing at home, we may need new suit sizes. But I think that's the point. You know, people have this pent up demand to go out and do that. I think there will be an initial burst of sales in that level. But again, you know, there's going to be a reversion to some sort of new normal. And that new normal will be what retailers are calling omni-channeling, where some sales will go in store, some sales will go online. The retail that we think long-term will survive from a bricks and mortar perspective is necessity-based retail. So we're thinking groceries, food and drugs and alcohol. If you're living in a condo somewhere and you need that, you're going to go downstairs and right by that shopping and buy that. Also, experiential retail, as we mentioned, just the experience of going into retail and getting some sort of experience, whether it's a food hall or a demonstration by Tesla, for their stuff. All of that, the communal sort of live, work, and play sort of retail will survive. Unfortunately, we think that a lot of the commodity-based retail, and a lot of this is in enclosed retail malls like community centers and regional malls, where people go out and buy batteries or shop for cards or things like that. Unfortunately, I think the business model is shifting, and a lot of that will turn into dead space. So the key question will be for a lot of that enclosed retail is, how do we reinvent it? What do investors and developers do to reinvent that retail to keep it vital? And that's something that I think everybody is weighing on when we think about the future of bricks and mortar retail.
And so, just sort of in closing, then, Carl, do you have a thought on how that retail space is going to be used?
Well, I think retail will increasingly be part of more of a mixed use sort of situation where, in more dense locations, you're going to have some other uses like some office, like I said, a lot of residential probably as well. And the retail that comes along with that will be there to service the density that's there. That retail, you count the number, we used to say count the rooftops, and that's where the retail goes. Well, count the elevators, that's where the retail goes. I think that's kind of retail will continue to be important. There will be some super regional malls that become a mecca for live, work, and play. And you will get some other uses like, cultural amenities, park space, concert space where people gather, they play, and the retail there is to service the experience. That kind of stuff will probably always be there. I mean, humans are always social animals, and we need a place to socially get together, to have experiences, to have fun. And that kind of retail, in my mind, always comes back because there's an interactive sort of environment for it. The stuff that I'm more worried about is, in locations where population growth isn't really growing very much. We aren't seeing many people moving there. They're hollowing out. And there are these retail offerings that are there that are community malls or grocery anchored sort of strip centers. I think there's going to be some hollowing out there. And the highest and best use for some of these centers may not actually be retail. They may need to be reinvented to be something else, whether that is more residential or whether that's a pickup spot for industrial distribution for e-commerce channels, or something else. That is going to be the challenge. Now, fortunately, in Canada, we have our per capita retail space per capita is actually a lot lower than the US. So we don't have a lot of excess retail supply in Canada versus, say, parts of the US. So that kind of demand destruction that occurs in retail may not happen nearly as much in Canada. But there are regions and parts of Canada that aren't seeing growth, that aren't seeing people coming there. And I think that's the retail that's most at risk over the long term.
Yeah, and like you said off the top, is sort of an acceleration of the existing trends with I guess retail and industrial use as well, right? So I'm sure we could spend another chunk of time talking about the different asset classes, Carl, but that's all the time we have for today. So again, thank you for doing this, and it was great chatting.
Fantastic, great chatting with you as well. Thank you.
Yeah, hopefully we'll get to do it in person at some point later this year.
Fingers crossed.